Welcome to today's market report. European stock markets traded largely unchanged on Tuesday, with investors focusing on earnings from blue-chip companies like HSBC and BP ahead of the start of the Federal Reserve's two-day meeting. The DAX in Germany traded 0.1% higher, CAC 40 was flat, and the FTSE 100 in the UK climbed 0.1%. Trading ranges have been tight in European stock markets on Tuesday, with many investors stuck to the sidelines ahead of the latest Fed meeting. The US central bank is widely expected to keep rates on hold and asset purchases unchanged, but investors will pay close attention to comments from Chairman Jerome Powell, particularly regarding inflation. Ahead of that, the focus has been on the European corporate earnings season. BP stock rose 2%, dragging the oil and gas sector higher after the UK oil major's profit soared in the first quarter to $2.6 billion thanks to stronger oil prices and windfall profits in gas trading. As previously indicated, the energy company is to resume share buybacks in the third quarter, confident in its ability to generate free cash flow at oil prices above $45 per barrel. HSBC stock climbed 0.7% after Europe's largest bank by assets reported a 79% rise in the first quarter profit, as an improved economic outlook allowed it to release cash set aside against the bad loans because of the coronavirus pandemic. By contrast, UBS stock fell 2.6% as the world's largest wealth manager's results were hurt by a $774 million hit from the default of US investment firm Archegos. Schneider Electric stock rose 1.7% after the French energy group raised its full-year guidance after reporting a 12% rise in first quarter revenue, while Whitbread stock slumped 3% as the UK-based hospitality giant reported an annual loss of about $1.4 billion after COVID-19 curbs crimped all major travel in Britain for most of 2020. Oil prices edged higher on Tuesday, but gains have been capped by growing concerns over the impact on demand for fuel given the surge in COVID-19 cases in India, the third largest crude importer in the world. US crude futures traded 0.9% higher at $62.45 per barrel. Brent rose 0.9% to $56.62 per barrel. Gold futures fell 0.1% to $1,778.55 per ounce. On the FX front, GBP/USD is under 139 as US yields make their way up. Boris Body's remarks make the pound powerless ahead of Powell, while Tuesday's 4-hour chart is showing bears are improving their positions. Boris let the bodies pile high is better than having another lockdown is weighing on the pound. At the same time, having to deal with scandals may hobble the government's efforts to push the economy forward despite the impressive vaccination campaign. The Federal Reserve could be forced to acknowledge that America's economic boom may force it to taper its bond buying scheme as soon as this year. That is the prerequisite for raising rates. Speculation is causing some tensions and somewhat keeping currencies in range. Brexit is also an issue that could come to haunt the pound despite new EU offers on the Northern Irish Protocol. Progress has yet to be made. While COVID overwhelms almost everything, leftovers from the Brexit deal still lurk in the shadows. Pound dollar is suffering from downside momentum on the 4-hour chart and has recently slipped below the 50 simple moving average, a bearish sign. Initial support waits at the daily low of 136.80, followed by 138.20 and 138.10. Resistance is at 139.25, the weekly peak, followed by 139.50 and the all-important double top of 140.10. Euro-dollar has been edging lower as US yields have been rising, the dollar's next move hinges on the next move by the central bank, but that is due out only on Wednesday, the perfect condition for tense trading on Tuesday. Nevertheless, Eurobonds may rage earlier. Returns on 10-year Treasury bonds has edged up to 158%. However, without any trigger to rise, the ebb and the flow of markets may result in a slide back to the bottom of the range, or at least under 155%. That could soften the greenback. Durable goods orders for March missed estimates with a meager 0.5% increase, contrary to other upbeat statistics for last month. COVID-19 cases are edging lower and countries are gradually reopening. Adding reports of an accelerating vaccination rate could also support the euro. The dollar index was up 0.2% at 90.918, while dollar yen was at 108.20. This is today's market news. Thanks for listening. We'll see you next time.